So today's video is just a continuation of the 5 bullet points on why the plan described in Taming Wall Street is such a great tool to have. And in this video, I just want to talk about how the companies backing this program are secure and stable. The main thing is when you think about who you want to partner with growing your money, that's a big deal. Who you want to partner with after you've left your employment and you're in your retirement years. Who is going to take care of your family after you die. These are big areas that it's so important to trust your partner, right? And so the groups that we work with, I'll just give you a few things. I probably can't cover them all, but all the companies that I recommend have all been in business for over 100 years. One of them's been in business for over 115 years and is one of the largest money managers in the world. Another one has been in business for 170 plus years. So if they've stayed in business that long, like you think about it, the average lifespan of a company that gets on the Dow Jones is about 30 years. And then it'll pass to a family member, or the times will change, they won't keep up, something will happen, and they're either booted off or they go bankrupt or something, right? Their model doesn't keep up. And so we've seen that, right? Think about how many companies you know that are 50 years or older, right? It's just always changing. So these companies have been in business for over 100 years. The other thing that I like about this is they have to abide by something called legal reserves. So insurance companies must have reserves in their coffers, in their bank accounts, in case of a catastrophe or a larger amount of deaths than they expected, to cover their annuities or their death claims. So these are mandatory, and every state, all 50 states, Puerto Rico, Washington, D.C., if a company is given permission to do business in your state, then the state has reviewed their financials, they've reviewed their credit rating, they've reviewed each individual product. That has all been checked off on a national and a state level. Okay, so that's a big deal. And then just their conservative approach to growing your money. Now, I'm going to tell you something. These guys are not here to knock it out of the park. They're to grow your money every single year at a conservative rate and be there for you when you need them. So, there's nothing really sexy about this plan. But think about this. What's more likely to happen? That you're going to get 8% every single year in a taxable program like Wall Street predicts, or that a company who's been getting 5% or higher for 100 years is going to continue to do that. Now, 5 to 6% in a vehicle that is not able to be taxed is equivalent to about 8% in a vehicle that is going to be taxed. And so you don't have to get as high of a return because you don't have Uncle Sam taking a huge bite out of the apple, right? And that consistent year over year compounding, that's what grows and builds this. And then last of all, if you were to die, these companies have always paid out on their death claims. And so you don't want to be partnering with somebody that if something were to happen to you prematurely or ever, which will happen, 100% chance of death, right? That money's going to be there for your loved ones, right? Whereas in a 401k, upon your death, Uncle Sam and death taxes are going to ravage your life's work. This protects your life's work. This protects your family. This protects your money in retirement, and it grows your money while you're getting there. Hey, if you have one of these plans, make a comment. Let me know. What do you like about the insurance company that you're with? Otherwise, go ahead and subscribe to my channel and hit the bell so that you're notified of future videos. If I can help you in any way or you'd like to see some numbers, please reach out to me at Stephen with a PH at yourbridgeplan.com. Otherwise, thanks for checking out today's video.